There are a few key questions that we always get asked by property investors and developers. One being, how much can I borrow?
This is a great question and one that will keep coming up even when you are an experienced property investor or developer.
A lot of people get stuck with this question as they compare a bridging loan to a buy to let mortgage, but there are some key differences to be aware of.
For a basic bridging loan, the lender will use the same loan to value metric as a buy to let. So they will take the current value of the property and times that by their maximum loan leverage amount. This is called the gross loan.
It is the absolute maximum amount the lender will provide to you. It's also the amount that you'll need to pay back as part of the loan agreement if you do use the full loan term.
We like to use a pie chart. This pie chart represents the gross loan. An example is, say you're buying a property at auction with a purchase price of £400,000 and you can get a bridging loan with a 75% loan to value. This would mean the maximum loan will be £300,000, but this is the gross loan, not the net loan.
The net loan or the net amount is the amount that you will actually receive into your bank. This is where people get confused.
You're probably thinking, why don't I get the £300,000 as per the loan agreement, like I would do with a buy to let mortgage?
Firstly, buy-to-let mortgages are intended for the long term, not 1 to 12 months like a traditional bridging loan.
Also, you pay for a buy to let mortgage each month, whether that's interest only or if it's on a capital repayment structure. This is called when you service the loan. You service it or you pay for it each month.
The majority of the time with bridging loans, you don't service the interest as you often don't have any income to support it, like with the rental income that you receive from a buy-to-let investment property, for example.
Bridging is in place as a short-term funding requirement. For example, if you need to move quickly to buy a property at auction as you can't get a mortgage in time, or if you're converting a property so you can't let it out whilst you're obviously doing the works.
To explain this, let's split up the pie chart to work out the net amount. So we know the gross amount, the full pie is £300,000. The key parts which make up a bridging loan are the interest and the lender's arrangement fee. There can be other fees like a lender admin fee too or a lender exit fee, but to keep it simple, let's just stick to the interest amount and an arrangement fee only.
Say the cost of the bridging loan, so the interest is 1% per month and you need a loan term for 12 months. The interest amount will be £36,000. The lender's arrangement fee is often 2% of the gross loan, so that's another £6,000. These need to be included within the gross loan amount so that if you then deduct these two figures, you're left with the net figure, which is the amount that you'll receive from the lender. So in this instance, it's £258,000.
Side note and disclaimer on the interest amount. You only pay interest for the time that you use the loan. So if you repay within, say, 6 months, you'd only pay £18,000 in interest opposed to the full term amount noted of the £36,000.
Also, it's unlikely this straight line interest calculation is used. Every lender has slightly different terms and the way they calculate the interest, but many will calculate and compound the interest daily.
In summary, a bridging loan is made up of the interest amount, the lender's arrangement fee, and the amount you receive, the net amount.
Another point to note is you will have to factor in the lender's legal fees, which are always payable by you as the borrower. Again, different to the buy-to-let market, where you can often get a free legals, free valuation, and sometimes even cashback.
The reason we say factor in the lender's legals is because these are often automatically deducted from the net loan amount that you receive, unless you have a fixed fee and these have already been paid at the start of the legal process, also known as paying the legal undertaking. You'll pay this amount to your solicitor, who then holds it as part of the transaction.
So what happens when you're not looking for a simple bridging loan? Instead, you're doing a project where you are adding value and you need one, funding to support the purchase, plus two, support on the refurbishment or conversion cost too.
Well, another figure will need to be added to the mix called the gross development value, the GDV. The bridging loan will then be based on the loan to GDV, so LTGDV, not as explained in this video, which has been based on the loan to value. We'll be breaking this down, breaking the calculation down in another video.
If you found this video helpful, we really appreciate you liking it via the thumbs up button and subscribing to our channel so you can keep up to date with the latest videos that we release.
And if you have any questions, please leave us a comment or contact us via the details on our website or in the link below the video.